Good evening, everybody. I hope everybody can hear me all right. Tonight we've got the great pleasure of having Silas Peters with us. And because I'm having problems with my mic, I'll just give you a quick intro. Silas has very good trading techniques. He's been been at the global trading desk at the Chicago Board of Trade. Just as he came out of college, he's worked executing trades for hedge funds, banks, institutional investors. So he's got some very good trading techniques, and I'm not going to use up any more of his time. Silas, welcome to the Candlestick Forum. We're anxious to see your information tonight.
All right. Well, thanks a lot, Mr. Bigelow and Team Candlestick. Very appreciative of being able to join you and your team this evening. Can I get a quick sound and audio test here? We had a little bit of mic and tech issues logging in, so I just want to make sure I'm loud and clear. Hopefully everybody can hear me. Even with the Alabama Southern twang, hopefully it's not too painful for your ears. So, but thanks again. In all seriousness, thank you to the Candlestick Forum trading team as well as Steve. My first time here, so I'm very excited and I appreciate your time. I know everybody's got busy lifestyles, especially this time of the year. It's very hectic around my household. Kiddies starting back to school, other activities starting to fire up. So really just churning and burning all the time. But so I'm loud. Bring mic closer to my mouth. Wouldn't that make it louder? Okay. So I think everybody else says the sound is okay. Let me just make a couple of adjustments. Is this better? Is that better? Worse? All right. I just moved it a little bit further away. All right. So we're going to do the best we can, and we're going to go through this presentation. I promise you that I'm not going to waste your time. Something you may have already know about, may have not known about, but I can trust that it's a very valuable strategy, and it's one that I use on a daily basis. And so let's go ahead and get started. So thanks again for having me here. Again, my name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. Looks like we have an audio test. Can you see my slides? Can you see my first slide right here? We're going to move to my mechanical done-for-you strategy, any market, any time frame. So if you can see that, you are in good shape, you're in good company, and you are in the right presentation this evening. So, all right, I'm sorry about the sound. This is really about the best I can do. So we're going to go ahead and keep rolling here. So let's start off. We have to start off with a risk disclaimer here, as required from our friends from the regulatory governing bodies as well as our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. You can lose money in trading. Only risk capital should be used. So why don't you go ahead and read that, memorize it, take notes. Why don't you tell me, where is everybody chatting to here in the world? I am in the very hot and humid southeast on the Gulf of Mexico in South Alabama. So very hot. Very humid, and it doesn't look to be calming down anytime soon. We've got people from New York, and first off, if you're on the East Coast, best wishes to you. You're probably not watching this anyway. You probably don't have the internet. So no sound. Sounds like we do have sound. We have people responding. So we got people from Texas, South Florida. Jules, hope everything's all right down there. Southeast Texas, Florida, California, Chicago, 96 in Denver. Wow. Didn't know it got that hot up there. All right. Good deal. So let's go ahead and keep on moving. So again, I'm going to introduce myself one more time. My name is Silas Peters. I'm a proud husband, also a proud father to these beautiful blonde-haired, blue-eyed beauties on the right in front of my alma mater at the University of Alabama. So 3 days after I graduated from UA with degrees in investment finance and economics, I sold my vehicle, packed up my small belongings, great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And it's here where I was really bitten by the commodity bug or the trading bug, if you will, and I never really looked back. While there, I helped run a global trading desk, primarily placing and managing books of trades across the Americas, Asian, and European sessions, working with large block order flow for hedge funds, banks, CTAs, other institutional companies, and large floor spec traders. Along my trading journey, I have been a part of building and managing multiple futures and equity brokerage firms, broker-dealers, managing operations, trading back office sales and support. Also have worked as a private family office consultant. I hold or have held these various securities and futures licenses, and then in 2016 I launched Seasonal Swing Trader. So enough about me. Let's talk about you. Is this your trading desk? Does your trading desk look like this? Raise your virtual hand or your digital arm. I certainly hope not. This is not my trading desk. I found this on the internet. It's kind of a bad joke. Thought it was funny at the time. But I feel like this is the perception of what a lot of people, at least probably my friends and family, think that this is what my office looks like. In case it doesn't look like this at all. I do have a handful of monitors. I've got screens, of course, dedicated to my trading, my charts, and quotes and things like that, and then other monitors and computers that I do my day-to-day operational business. But the point is, and we're going to kind of keep this theme throughout the presentation, is that it's absolutely not necessary. And that, in fact, is ridiculous, and all it does is cause harm to your eyeballs. So, paralysis analysis. Are you a victim or have you been a victim? I'm raising my hand. I have been a victim before. Per Wikipedia, it's the state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So a lot of you, your charts that look like this, I've been a victim in the past. I've had charts that look like this, got induced by the shiny object syndrome, and then what happens? I say, what am I doing? I end up picking those, a lot of these indicators and widgets and gadgets and kicking them to the curb and deleting them from my chart space. Because in reality, it's just not necessary. So, appreciate the interaction so far. What is everybody trading? I like to see who I'm talking to, what markets you trade. Do you trade stocks, options, futures, forex, cryptocurrency, any or all of the above? I trade all of the above with the exception of cryptocurrency. I have various cryptocurrency accounts across the internet. I have no idea how the hell to get into most of them, to be honest with you. I view it as my lottery ticket. One day I'll maybe be able to log in and some type of obscure, weird coin that I have money in maybe pays for a college education. Who knows? But I do trade actively stocks, options, futures, and forex. So we have a pretty good, wide, diverse crowd here. Stocks and options. Options, commodities. Let me pull the chat up here. A lot of options traders, option spreads. Okay, that's cool. So we got a good mix here. And so the point is that you're in good hands because regardless, I'm going to show you something that works literally in all markets. So what I'm going to share is highly accurate. It's profitable. It works in all markets, all time frames, and it's about 99% mechanical. And most importantly, it is simple. So my agenda and promise to you is we're going to learn a simple and mechanical setup that is repeatable regardless of the market or time frame. So I'm going to ask you at the end of the presentation, or actually in the middle of the presentation, have I fulfilled my promise? So if you're here today, you may have read somewhere or seen something about this $10,000 trade promise. And I will tell you right now, I'm the last person that's going to stand up and beat my chest about a trade, a profitable trade, or how good our success rate is, this and that, because we all know that the markets are equally humbling and that a loss is likely around the corner. It's just part of trading, right? But I do want to show you this example because these are trades that we talked about multiple times for weeks and weeks and weeks, if not months, in multiple free presentations as well as in our members area. Why? Because of two high probability things that were occurring. One is seasonality. 2 is the pattern that we're going to talk about later on in the presentation. These went on to meet their $10,000 trade objective and then some. We also talked about sleeper markets. We talked about sleeper markets in coffee and orange juice. You can see here from the historical price averages on the 5, 15, and 30-year price averages, the market typically tends to bottom at a particular time of the year, which we were at. The markets were also bottoming. So we don't just blindly trade these because historical prices say something bottoms and they should go higher. We wait for confirmation via the high probability pattern. These markets ended up doing that, coming to fruition, moving $6,000, $7,000, $8,000 plus per contract. We also talked about the grain markets, in particular corn, soybeans, and wheat. The markets were being lulled to sleep due to out in the Midwest. We knew that they were getting too quiet to the downside, and there were probabilities that they were about to go higher. And what happened? We called these markets. They ended up going $6,000, $7,000, $8,000 per contract in corn, soybeans, and wheat. Now, this presentation is not about all that commodity for futures. Just telling you that these were trade setups not made in hindsight. We do this all the time in real time. So, the setup responsible for the equity curve below. Are you ready? Drum roll, please. It is the 1, 2, 3 pattern, or the 1, 2, 3 top or bottom. So, who here is familiar with the 1, 2, 3 pattern, or referred to as the 1, 2, 3 top or bottom? I would be surprised if 99% or 100% of you were not familiar, because it is one of the most fundamental technical patterns in the textbook. I'm talking like Technical Analysis 101, but highly, and I mean highly, overlooked by most traders. So yes, everybody's pretty much saying yes, part of it, familiar, couple of no's, and that's great, because even if you are familiar with it, I can almost bet you $1 you're probably not using it in your day-to-day trading. So let's talk about the setup. It's price action based, and the pattern is comprised of a low, and then a higher high, and then a higher low, and then a break of that higher high in the instance that we're going long and versus short. It anticipates a change in the trend from up to down on a break below the number 2 or the B point. Anticipates a change in trend from down to up on a break above the 2 or the B point. Alright? So the strategy usually occurs at the end of trends and swings. Could be an indication of a change in trend. Could also be found within a trading range. So some would argue, hey, isn't that a counter trend trade or reversal type trade? And in essence, it is, but we show you filters and conditions to make the trade put the odds toward your favor. It works extremely well when the pattern sets up at significant areas of support and resistance. Other high probability technical patterns such as tops and bottoms, double tops and bottoms, head and shoulders, etc. So let's look at the basic mechanics. Start off here with the 1, 2, 3 top. Don't worry about what asset class this is or what time frame. It doesn't really matter. We're just learning the very basic plain vanilla mechanics. So here we have the 0.1 foreign when it becomes the highest peak of the given price move. When the market pulls down, we have that established 1. Once it finds short-term support and retraces, does not take out the number 1. Once we pull back, we have the 1, 2, 3. And we're looking to get short on breaks and or closes below the number 2. So that's where we're looking to get short. So let's look at the bottom, 1, 2, 3 bottom. Obviously, it's going to be the exact same concept, but to the inverse. So here we have the market drilling down here, finding the lowest low, giving us our support, or the number 1. Market trades higher, then pulls back, giving us established number 2. The market trades lower, lower, lower. As long as it doesn't take out the number 1, we're okay. Once it pulls back, we get the 3. 1, 2, 3. We don't know what happened in this particular example, but we know that we were looking to get long on breaks or closes above the number 2. Alright, so let's look at some chart examples. We're going to look at several chart examples. I appreciate the questions. Feel free to type in the questions all you want, and I'm going to address those at the end so we can get through the presentation. So, this is a daily chart of the Australian dollar, the 6A. If you don't trade futures or Forex, feel free to look at the ETF FXA. You're going to see the exact same pattern setup. So here we have a daily chart. When we're looking at a daily chart, we primarily like to focus on the 52-week lows. That's not an absolute rule, certainly not in stone, but that's where the higher probability patterns are going to set up on the daily chart. For me, I like to look at the 52-week highs and lows. I also drill it down a little bit tighter so I can find more opportunities. And I look at every 6 months or every 126 bars. But to keep it simple, we're going to focus on a 52-week high. So that is this here, the number 1 point. See the market pulls down, retraces, giving us the 2. We have a shallower retracement, could go as high as here as long as we don't take out the 1. We have the 1, 2, 3. The market breaks down below the number 2, giving us our short. You say, okay, that's great, Silas. I already understand. I understand what the 1, 2, 3 top is. But where is my risk? Where is my target? Okay, your initial risk will always be above the number 1 point in the case that we're going for a short. Your initial target is the distance between the 1 and the 2. So we measure from the high of the 1 down to the low of the 2, and we simply project that from the low of the 2 downward. This example is about 225 ticks, or a little over $2,200 per contract. Now you've got to allow the market room. You've got to give it room, allow the market room to make it the move that we're anticipating, right? So that's why we cut our stop or risk above the number 1. As the market starts to move in our favor, we can then move it down to the next areas of resistance or support. So let's look at a chart of Walmart, daily chart of Walmart, WNT. We have a number 1 point here. Why? Because it's a 52-week high. Market pulls down, then trades back up, giving us a 2. 1, 2. Market trades higher. Once we stop making these lower highs and pull back, we get our established number 3. We have a 1, 2, 3. We have a handful of days here that go by where nothing happens. But what have we already done? We've eliminated what 99% of traders struggle with. Where do I get in? Where do I get out? Where do I put my stop? Where do I take targets? We know all of that way in advance, right? We're looking to get short below the number 2. We know that once we get triggered into a short position, we know that our stops are going up here, and our target is the distance between here and here, which is $5 in this example. Look at more chart examples. We're going to look at the 1, 2, 3 bottom. Here's a 15-minute chart of the E-mini S&P. So we have any futures traders in here? We have any futures traders in here? Works on intraday market like a champ, and if you stick around the end, we'll take a look at what happened in today's market. So here we have a number 1 point on it, putting in on a session low. So let's pause for a moment and talk about how I define a session low. If you're not familiar with futures and forex, they dang near trade 24 hours around the clock, really 23/6. And so when I'm looking for a session low, I'm looking left. I'm going back left to the Globex session. So the Globex market opens on Sunday at 5 p.m. Central, trades all the way through the night around the clock, closing at 4 p.m. Central, takes a small break, reopens at 5. So I start my trading day around 6 a.m. Central. If I look back left, I'm looking for new session highs, new session lows throughout the day. So if you're starting your day in the European session, say 2 or 3 a.m., or you're starting in the New York lunch session, or maybe even the last hour of the day, you're looking left. You're waiting for new highs or new lows for that session. So I hope that makes sense. But here we have a new number 1 low right here. Market trades higher, pulls back, giving us a 2. We have a shallow number 3, 1, 2, 3. And aggressive traders would work to get long on a ticker to above the number 2 point. So we break above the number 2 point. Aggressive traders are long here. A more conservative or prudent entry method may be to wait for the market to retest the initial breakout area, or wait for the market to hook back up through the breakout levels. You see the market hooks back up through the number 2 breakout level. So using that entry method is going to keep you out of other potential trades, potentially more other winners, potentially other losers. But it's also going to keep you out of false breakout scenarios where we dip up and then dip down. But oftentimes the market will dip, break through, and continue to its profit objective. That's okay. There's plenty of other markets to take a look at. So this one, you can see went up to its 20-point profit objective. Look at a chart of Apple. This is a weekly chart of Apple. Actually, should be AAPL. And on a weekly chart, this is a way to really hedge some serious moves and manage longer-term portfolios and hedge some serious moves. So here we are on a weekly chart. We have a 1, 2, 3, also a double bottom. So we have a 1, 2, 3, and we get triggered on this long, this bullish candle right here above the number 2 breakout. A few weeks go by and we get the retest and trade back through the number 2 breakout area. This is where we get long Apple. How? We buy Apple stock, we buy call options, we buy call spreads, we sell out on put spreads, and the list goes on. And that's how we participate in a 1, 2, 3 bottom pattern on the weekly chart. So this is where people want to start throwing banana peels and tomatoes. Oh no, it's not 100% accurate. Sorry to bust your bubble. Nothing in life nor trading is 100%. So we're all big boys and girls. I know most of you realize that, but I have to tell you it's not 100% accurate. This is an example of a failed trade. I actually like this trade. I may have taken it in my personal account. So here we have a new number 1 high, session high from the 5-minute chart of the E-mini S&P. Market comes to this trade. We have a strong vertical uptrend here, trend line break, and we're either looking to get short on the initial breakout below the 2 here, or you wait for the hook back down. Market's probably good for 1 or 2 ticks, or 1 or 2 points, I'm not real sure, but the market decides to reverse, and you're either stopped out here if you're managing your risk above this next area of resistance, or if you didn't do anything, you sat on your hands, your risk, you're stopped out here. I actually noticed after I posted this example that we had a new 1, 2, 3. This is a new higher high, so we start to count over 1, 2, 3, get a couple retests, and that trade actually ended up being profitable. So here we have a no trigger trade. It is what it is, neither good, bad, nor ugly. It's just a voided trade or no trigger trade. So I get a lot of questions about this, and so I thought it'd be worth sharing. So here we have a 1, 2, 3. We're looking to get long above the number 2. What happens? The market starts breaking down, taking out the number 1 lows. We void the trade, we dust our hands off, and we start to count over, looking for another setup. There's 1, 2, 3. What happens? We're looking to get long above the number 2. Market breaks down, takes out the number 1 low, we start to count over. And really, when this happens, it's really a good thing, because what typically happens is you've got this market making lows and lows and lows, and what I like to see is some type of divergence, whether you're using RSI, stochastics, MACD, whatever it is that you use, we're likely making higher lows on your RSI or whatever divergence indicator you're using. So we're making new lows, possibly making new highs, or not making new lows on the divergence indicator. So that is one of these things that we talk about that puts those odds or those favors on your side. So the 1, 2, 3 pattern trade management. Again, the confirmation of entry on a break above the number 2 or B point for a long trade. Confirmation of entry for a short trade is on a break or close below the number 2 or the B point. Extra strategies. If you're trading a 1 lot, I would stress that you must target the distance between the number 1 and number 2. It's uncanny how often that this pattern will set up. It goes and tags that precise target right there, and will often reverse. But if you're trading multiple lots, whether you're trading futures, options, or shares, whatever it is you're doing, really that's where your risk management or your exit style comes into play. They're literally kind of a dime a dozen. I, for instance, like to use good old-fashioned support and resistance levels, basic trend line analysis, also Fibonacci numbers. But again, they come a dime a dozen, whether you're using moving averages, RSR, fibs, channels. That's where you would exercise your own judgment there, because it all varies per each individual. So I've told you that this setup works on any market, whether you're trading pips, in the Forex market, Pepsi, pot, either potash or pot stocks, pork bellies, or the Polish zloty. I've also showed you that it works on any time frame, where you're trading a tick, 15-minute, hourly, 240 daily, and so on. And on any trading style, whether you're a position trader, swing trader, scalper, or day trader. So I pause for a second and take a sip of water. Tell me, what is your trading style? What is your trading style? Somebody says it sounds like I have a mouthful of marbles. That's the first. All right, so a lot of swing traders, and that's typically the answer I get, swing, day. I had a couple of tips here and there. But the point is that you've got to determine what your bread and butter is. All right? And so my bread and butter is a 5-minute on an intraday basis, a 5-minute chart. I like the S&P. I like the NASDAQ. I like crude oil, a couple of the currency markets and 30-year bonds. And I also really like the hourly and the 240 on doing intermediate swing trades on the currencies. And then, of course, daily. I mean, that's where I started my trading journey. When I first started, I was working a corporate job, didn't have time to watch, the markets all day long, and I would look at end-of-day charts, focus on end-of-day charts, looking at them in the evenings, looking at them early in the morning, doing my analysis and placing my trades accordingly and going off. This is long before everybody had smartphones, checking smartphones in their cubicles or whatever. I didn't have that available. I had no clue what the hell the market was doing, which is probably the best thing that could have happened, probably the best thing that could happen for a lot of people. Don't need to be glued, have your charts look like that example I showed you, have 15 monitors watching every tick. It's just not healthy, really for you physically or for your trading account. So, you've seen the proof. Let's look at some real trade examples. Now, we actually looked at real trade examples, but let's look at some real trade examples that we actually use in our service. So, I'm going to let you guys and gals read all this text over here on the right-hand side. I'm going to focus on the chart and just kind of work my way left to right. So here we have a daily chart of crude oil. Everybody's familiar with crude oil, whether you trade futures or USO or maybe a leverage ETF, CFD, whatever. We have a daily chart and we have a 52-week high as indicated by the red number 1. All right. So we have a number 1, the market trades down, bounces up, giving us a 2. We have a 1-2, market trades higher, does not take out the number 1 high, and then pull it back down. So we have a 1-2-3. Now this is a smaller 1-2-3. I will admit you may have to have been a little bit more keen to the eye or experienced to catch that because it's a little bit shallower, a little bit quicker trade. But regardless, nonetheless, it's a valid 1-2-3 setup. So we have a 1-2-3. We know immediately where our stop is, where our entry is, and where our target is. And the market comes down, reaches its $3 profit objective or $3,000 per contract. Now, what happens next? You can see that the market trades range bound. You say, well, Silas, isn't this a 1-2-3 bottom? Well, yes, it is. It's a 1-2-3. It's a very nice 1-2-3, but it's in this range. I'm not interested in trading all range-bound markets. I'm following 30 to 35 other commodity markets on a daily basis, as well as 30 other futures, currency markets, and hundreds, if not thousands, of stock ETFs and indices. So I'm not interested in catching every little whippy move. So here we have a new number 1 point. Why? Because it's a new 52-week high. I'm waiting for new 52-week highs on the daily chart, and that is exactly what I get. So here we have a 1, market pulls down, giving us a 2, and then a bounce up, giving us a 3, 1, 2, 3. Now, I'm really starting to lick my chops at this particular setup for a couple of reasons. One, well, we have a very high probability and proven 1-2-3 pattern that we've been talking about. Secondly, we're approaching a time period in the market from a calendar point of view where historically the markets tend to go lower at that particular time of the year. So those two things combined, that's what I call the perfect marriage. That's what we had here, and we got our short entry. First profit objective was $4 or $4,000 per contract. So we shorted this market. How? We shorted crude futures. We shorted crude call spreads. We bought puts. We bought put spreads. We used USO, leverage ETFs, and whatever style of trading you can think of, CFDs. There is no excuse for a reason not to take advantage of that trade. Now, this market ultimately moved down $20,000 per contract. We didn't catch that entire move, but we damn sure caught a large chunk of it by just simply trailing our stops on the balance of our position. And so now, what we're doing here is we're waiting for a new potential bottom formation or bottom reversal. And we're watching the markets are making new lows. And I want you to remember this chart and all these subsequent charts because we're going to go back to them and I'm going to show you something special. So here the market comes down. And we have a potential 1, 2, 3 bottom here. 1, 2, 3. Another example, a trade example where I'm really looking to back the truck up here and get long. Why? We have a 1, 2, 3. We also have a beautiful pattern, technical pattern, which is probably my second or third favorite pattern, which is the triangle. Beautiful triangle. And then third, we're approaching another time of the year where the market tends to go higher. The market tends to gravitate higher at this particular time of the year. So what happens next? Well, you can see that the market breaks down, takes out the number one low, and ultimately flushes down another $10,000 per contract. Well, thank God that this pattern, because it hit my emotions in check, kicked them to the curb, because I would have wanted to get long because of what I thought the market should do. And I waited patiently for the pattern to say no. Market traded down, finally giving us a final number one low, 1, 2, 3, and the market met its $5 profit objective, and then some. All right, let's take a look at gold. Now, this is a chart of GLD, the ETF. And when I look at futures or commodities, I primarily like to look at the underlying or the actual futures contract. So I've looked at GC because the chart is much more cleaner, it's much more fluid. You're not going to see all these gaps because they're trading around the clock. But regardless, if you look at GLD or the ETF, it doesn't matter. You see the exact same setups. So here we have three setups on gold. We have a 1, 2, 3. See very clearly, we break down below the number 2 point. We get short. We get short gold futures. We buy puts. We sell out of money call spreads. It reaches its $4 profit objective and then some. And now we turn around and we look to the long side. We have a 1, 2, 3, also a double bottom. See the market breaks above the number 2, retest, and we get long gold. Here, very similar. You say, well, you missed a huge move right here. Well, maybe I did, maybe I didn't. Again, I'm only looking for new highs or new lows. I'm not interested in trading all the range-bound markets. So here we have a very nice trade. If you caught that or wanted to take it, again, I'm looking for a new low. We get that here, 1, 2, 3, looking to get long above the number 2. What happens? I don't know if you can see down here at the bottom, but we have one last low here that takes out that number 1 just by a hair. So we start to count over. Here we have a 1, 2, 3. Market gaps up above the number 2, 2 days in a row. 1, 2. Comes back down, retest, also have a trend line, so we load up on call options in gold. So just by looking at these examples, here's where, I would encourage you to ignore what so-called, Joe Guru on, Bloomberg or CNBC is talking about, or what your overseas gold and silver newsletter guy is saying where gold is going. Who cares? Who cares trying to predict prices? Just let the price action charts tell you the next steps. So here we look at Delta Airlines, daily chart of DAL, 4 trade examples. 1, 2, 3 to the long side, 1, 2, 3 short. Now, personally, I don't take these. I like the market to come back and retest or hook back down, but we've got members and clients that will take all setups. So they're aggressively, buying puts or shorting stock. Short opportunity here. 1, 2, 3, market flushes down hard below the number 2, get a small retest or 2, breaks down, and then we get 1, 2, 3, market trades higher, retest, ultimately makes its $8 profit objective. Now, for my Forex buddies out there, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Makes a multi-session low here on 4-hour, also double bottom, 1, 2, 3. Taking the initial breakout here, so you're zipped into the long side, or you're waiting for that hook back up and through, good for 70 pips, and then we have a 1, 2, 3, smaller 40 pip profit objective, which is met up here. Day traders, 5-minute chart of the mini NASDAQ. Here we have 3 opportunities in one session. Multi-session low, or not a multi-session, a session low, 1, 2, 3. See the market peaks out above here, triggering you to the long side, if that's your style. Or if you wait for the hook back up, you get long here, reaches its 13-point profit objective. We have a new session high, 1, 2, 3. Market breaks down below the number 2. We have to exercise some patience here. Finally breaks down, reaches its profit objective. We get one last long trade of the session, 1, 2, 3. Breaks above. If you're lucky enough, you're working on the retest and your build within the next candle or two. All right, I'm going to take a swig of water, but let me ask, why are you here? You're here to learn my mechanical done-for-you strategy for all markets, all time frames. So have I fulfilled my promise to you up to this point? The question that I asked at the beginning of the presentation. Take one swig of water. Hopefully I see lots of yes. All right, awesome. Appreciate the feedback. So, I mean, it really doesn't get any more simpler than that. There's no guessing where to get in, no guessing where to get out, where the market is likely heading. If we had 100 traders looking at the same chart, we should have at least 99 people seeing the same thing, right? There's always one oddball that's overanalyzing. I'm just kidding. It's not rocket surgery. So, famous last words, at least in the South, but wait or hold my beer and watch this, which doesn't normally end up being a good situation or good ending for that individual. But in this case, it is. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the target were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty amazing. Well, you are in for a treat. You remember the examples I showed you earlier? I hope you do. I hope you do because it was just a couple of minutes ago. Here's that exact same chart we looked at earlier on crude oil, the daily chart of crude oil. So let's talk about this. I know you're all smart people, but let's talk about what all these snazzy colors are. So here a green arrow, this is your number 1. We have a red arrow, this is your number 2. We have a blue arrow, which is your number 3. 1, 2, 3. Okay, so now we define what that is. Let's talk about what this white chevron is, or this white stealth signal. This is telling me that this is the candle that broke or penetrated the number 2. All right? So it's saying, hey, we broke above the number 2, so this prints. You can see it down here. It's pointing up. This is the candle that broke above the number 2. It's not a buy signal. It's not a sell signal. It's just kind of a visual aid waving its hand at you saying, hey, we broke the number 2. Alert, alert. You may want to take action. So let's talk about the line. So if and only if we break the number 2, you're going to see this white chevron signal. And if and only if that happens, you're going to see these 4 lines. So the blue line, this is the breakout level or your entry level. Your red line is the stop level, your initial risk. The lime green line is what I call TP1 or take profit 1 or profit objective 1. The dark green line is TP2 or profit objective number 2. Now you say, what are all these green arrows? What is all this crap? Well, this is saying we're making new lows. New lows, new lows, new lows, new lows. Finally stop making new lows. We get a small 1, 2, 3. Market takes out the number 1. We start to count over. We didn't ever take out the number 2. Hence, no white chevron. Hence, no pretty line. Here's that example I talked about. It was foaming at the mouth to get long. 1, 2, 3. Never happened. We broke below the number 1 right here. We start to count over. Here's that last long setup. All right. Gold. Same thing. Here's the signal. 1, 2, 3. Hits TP1, hits TP2. Here's this range-bound market. Depending on your settings, you may have got that trade. It just all depends on your own settings. Here's this noise that we talked about. We're fishing for a bottom. 1, 2, 3. We make one last low. We get a new 1. 1, 2, 3. Market breaks above. We test. Gets TP1, TP2, and continues to truck upwards. All right. Here's DAL. Here's the 4 examples. There's the long. There's the short. There's the short. There's the long. Here is the 5-minute NASDAQ futures chart. Session high, 1, 2, 3. Market breaks down below the number 2, gives you a couple of retests. Hits TP1, hits TP2. New session low, 1, 2, 3. Breaks above the number 2, hits TP1. almost comes up to TP2, but it's close enough for government work. You should have at least taken some profits there. And people ask, well, does it work in a range-bound market? Well, theoretically, yes, it should, right? Because we're only looking for new highs and lows, so it's not going to capture this. Here we have a 1, 2, 3. Market breaks above the number 2, hits TP1, and you can see the market looking for a new 1, 2, 3 top, and we get that up here, 1, 2, 3. We get the print, breaks down below, retest, hits TP1 and TP2. All right. So, is this training for you? Only you and you only can answer this. So, if you're new to the markets and want to jumpstart your success, if you're an experienced trader, and you just want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about earlier, paralysis, analysis, indicator overload, just want to simplify your overall trading. And if you just want a specific step-by-step plan and want to avoid learning it on your own, and really even perhaps focus on part-time. And so one of the tests that I had to have before I released this is I brought my wife down to my office, who is a ballet teacher. I brought my 2 girls down who were I don't know, 7 and 6 or something at the time. They don't know a flying flip about the market. And so I showed them that. After they looked at the chart, they saw the colorful candles and lines. And after we got past unicorns and rainbows and Skittles talk and all that, I said, all right, we got focused. Let's look at this. Let me explain to you the premise behind what we're trying to do. Finally, after some education, they were able to understand it. But okay, if y'all can understand it, then literally anybody can understand it. I don't remember kindergarten, but I do remember learning to count to 3, and I remember learning my primary colors. And that's basically all you need to know. So I do have the special offer for today's workshop, attendees only. I do limit this to 25 spots because, yes, I monitor my own inbox. We have a support team, but I do monitor everything that comes in. I like to take care of my students and clients. I love to interact with them. So for today, I'm proud to offer and introduce the 3S code high-low indicator scanner. Good for the following platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get the chart pattern principles PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and monthly member bonus sessions. In case you forgot what the 3S code is, this is it. Here's the daily chart of CRE. You can see it printed on your chart. You're going to see exactly what I see. So here we are. We have a short, and then a long. Here's a daily chart of BAC. Long. Here's a chart of the Southwest Airlines. We have a short, that's TP1 to the tick. Here we have a short, losing trade. So we break through, comes back up, we get another shorting opportunity. Remember when I said, why do all the work? Let's let technology do the work. This is a screenshot of my Thinkorswim platform. You see I'm scanning for 1, 2, 3 top patterns and the Russell 1000. Only those that are optionable, looking for $20 a share. The green scan button, voila, I get my result. Also have one monitor dedicated to watch lists. I'm scanning 1, 2, 3 tops and bottoms across stocks, futures, forex, and multiple time frames. And you can do the same. We've been looking at Thinkorswim. This is what it looks like on TradeStation. You can see here the indicator in your scanner. Here's what it looks like on NinjaTrader 8. Here's your indicator. Here's your scanner. We just released this a few weeks ago or 2 weeks ago on TradingView. Here's what it looks like on a 4-hour chart of Apple. And here's what it looks like on MT4. So a Euro Kiwi 4-hour chart, long, short, and then a long. Full disclaimer, the scanning component is only available on TOS, TradeStation, or in NinjaTrader 8. No scanning component available for TradingView or MT4. So we all know that there's no real crystal ball in the market. So I like to view this as one that provides a plan of processing each morning. The platform scanning markets for me. I locate the setup, put my entry in, and I manage the activity. So today, you can get started with the 3S Code Pro package available for the first 25 lucky individuals. Again, here's the offer link. Grid Code High-Low Indicator Scanner for those 5 platforms, Chart Pattern Principles PDF Manual, Chart Pattern Cheat Sheet, 25 Top Option Strategy Guide, VIP email support, and monthly member bonus sessions. And today we're going to throw in 30 days access to the Seasonal Swing Trader Pro Trade Alerts via email and SMS text. So we recently offered these online at $19.97, $14.97, and $9.97. No joke, but today only because I was invited as a special guest to Candlestick Trading Forum, we're going to offer this for a one-time fee of $397. One-time fee, no hidden renewals, no hidden auto billing, no shenanigans, no tomfoolery. The offer link is www.seasonalswingtrader.com/free. I think it's being in the chat. Put in the chat. Seasonalswingtrader.com/free. So to recap, the indicator scanner includes all the following: the visual plot of the 1, 2, 3 top and bottom reversal areas that we just talked about. It's all customizable. So if you want to change the look back settings to find more opportunities, to find less opportunities, by all means help yourself. If you don't like the red line and you want hot magenta, by all means help yourself change the colors. You don't want arrows, you want dots. You don't want dots, you want hashtags. All means go for it. So we made that customizable. We also have this built to scan for setups and triggers. So what does that mean? It means that if you only want to scan markets that are setting up, then that's what you'll see. And when we first built this out, that's how we had it. So I actually started corresponding with a couple of students that said, hey, I don't want to see setups. I want to see markets that are triggering. I said, all right, let me scratch my head, go back to the programmer. And that's what I did. We added the trigger only, and we threw that in, didn't charge a single red cent for any of the enhancements that we made. And we made a bunch of them. But frankly, I don't know what else we could add. It's really good out of the box. Scan multiple markets, multiple time frames at the same time. Now, these are the results from the 3S code in 2018, when trading 2 contracts. I'll tell you right now, we didn't capture every trade. We missed a lot of potential winners, missed a lot of potential losers. But these were trades called in real time, not Einstein, before the fact, that were truly actionable. 2019, it's a good question. Here's 2019. Through July, we still have open positions from August. We don't have August tallies, but that's what we've done based on 2 contracts. And look, there are so many out there, you literally can't track them all, but this is what we track in our service. The bonus 1, you're going to get a 90-plus page PDF chart pattern manual with additional strategies, option strategies, seasonal market trends, order types, etc. Bonus 2, 25 top option strategy guide. Literally strategies for all account sizes, whether you're just trading basic calls and puts, with more intermediate and advanced, calendars, condors, verticals, diagonals, the list goes on. Literally something for all traders. Bonus 3, 30 days access to the Seasonal Swing Trader Pro Trade Alert service. You're going to get a minimum of 10 trade ideas per week, and it's really a lot more. Every Sunday, we run our proprietary seasonal scanner. We give you 6 seasonal scans in the equities, 2 in the futures, 2 in the Forex, and then we send that out in the members area. Every Wednesday, I do a member video update where we talk about those scans, we talk about our open position, and we talk about what is potentially on the horizon. So we talk about a whole bunch of other markets that are out there and ideas to consider, and we get that rendered, posted up into the members area for your viewing pleasure. These are some testimonials that come in, unsolicited. They come in all the time. I don't ask for them. I'm very humbled and happy that these come in. You see a guy shared his screenshot of an account up, 7,700 in Campbell soup trades that we did, lost 950 with Campbell, up 1,300 for G4, all simple calls and puts no spreads. Here's an example of what the SSP Pro alerts look like when they come to you via text. That's optional. You don't have to choose them via text. We don't throw you out to the wolves, leave you hanging out to dry. We stay on top of it with every detail live account as well. So You're going to get the symbol, obviously, strikes, premium, where we're taking half the positions off, how we're managing our trade. We don't blow you up all day and all night with text. We're only pouncing on the most opportune examples. We did send the trade out on Sunday evening because we had Brexit news coming up, up on Monday, and we thought it'd be prudent to go ahead and close out a couple of positions we had in some currencies. And like I said, ate what I could. Here are real snapshots of my account in Thinkorswim, where I'm doing equity and equity options. And in my futures account, where you can see I've got crude options, cotton options, copper options, yen options, nat gas, and S&P. And just another example of a quick 2-point trade in the E-mini S&P on a 5-minute chart. So the offer link again is www.seasonalswingtrader.com/3. And let me put that up here again. And happy to take some questions. And if you stick around, we're going to talk about, we're going to look at some live charts. We'll see what happened today. Took a trade in the E-mini S&P and took a couple of trades in crude oil. And there's some other markets I'm in, so you can see what's going on there. And I'm happy to take a look at any symbols and things like that. Absolutely, Pam. Absolutely, I do. We had a lot of grain trades that we've taken in the last few months, especially in the summertime. There are some prime opportunities every year at certain times of the year. Again, it's not all based solely off of seasonality or just the 3X codes. Trading is a little bit more complex than that. Don't trade anything just because something says buy, you should buy on this date, sell on this date. You got to take a deeper analysis, and that's what we do as part of the service. But I will say it's pretty damn good out of the box. Yes, it is coded to show on TOPS RT. That's what we've been showing in all of the examples, and actually we can look at some of those examples too. Let me find, so I'm going to move my chart over and just do me a quick favor. Sometimes when I move charts around during these presentations, they freeze. Can you see my chart on Thinkorswim? The 5-minute chart of the E-mini S&P? Pam, yeah, all the grain markets. I mean, I follow and trade about 30 to 35 markets. So, it's ZS is what I'm more familiar with, but it's probably S. Soybean meal, soybean oil, wheat, corn. Don't really trade oats, but I do watch it. Rough rice, don't really trade that. Don't really trade canola. So all the major grains, the 3-bean complex. 3 beans, corn and wheat. In fact, I can show you exactly everything. This is, one second, I'm trying to break things here. I'm going to show you, this is what it looks like here in the members area. So you can see all this educational resources. Here's all of your downloads, installation guides, videos, tutorials, all this good stuff, monthly member sessions. And then if you go, what you're going to get, you're getting 30 days to SST Pro. So you just simply click on the SST Pro button here. And here's running slow. Hopefully you can see that. Here's where you can sign up for SMS if you wish. Watch the welcome video to see how it works. Here is where you get to see our open close that is, as well as our archive. And if you go to ETF or future symbols, these are all the markets here that we follow and trade. You can see the archive for what we've done. It's all right here. See broken down month by month. You see January, February, March, April. You see all the trades, the pattern, entry, exit, how we managed it, all that good stuff. All right. So here's a 5-minute chart of the E-mini S&P. I took this short, shorted from 78, and I got really lucky because I worked 72 halves, and the low was 72 quarter. The target was 71, but I worked 72 halves, and I actually got filled. You would have gotten reachable target here post-market, but I generally try to exit before the close. And one thing I wanted to share with you also is the tick chart. I will tell you, I never traded a tick chart, wasn't interested at all. But again, it goes back to the interaction and the community we have and the correspondence I have with my members and subscribers. Is I had a couple of individuals saying, "Hey, you've got to take a look at the 233 tick chart." Like, thanks, but maybe later. And he kept badgering me about it. Okay, fine, I'll take a look at it. And was I ever amazed? The 233 tick chart has opened my eyes to a whole new realm of possibilities. In fact, so much, I am in the process of having an EA or robot, whatever you want to call it, an automated strategy built to trade off the 233 tick chart. So this is today, 9:05. Let's just go back to the start of the session. And we'll go back to, say, like 6 a.m. when I'm starting my trading day. And you're probably already seeing these before your own eyes, but let's just go through a little bit. All right, so starting here around 6 a.m., look at all of the multiple opportunities and trades that could be taken. And in fact, if you only wanted to dedicate from, say, 6 to 8, be done before the cash open, or maybe 6 to noon, these happen over and over again. Again, what you see, once you put this on your chart, you're going to see what I see. There's no hindsight or manipulation going on. It all depends on if you're setting too. Now, if you've got, here's where you can adjust your settings. I would encourage you to use custom look back period. Here's where you can adjust all of it. But here we have a short. Here we have a short. Here we have, you see the count, 233 ticks. Here's another short, another short, another short. And this is when we have a strong uptrend. Here's another short, and see these things hitting TP1 over and over again. Here was a losing trade, but as we talk about as part of the training, you've got to use some common sense here. The market has moved 50% of your profit objective. Hopefully, you're not just letting the market trade all the way up against you. If you had, the results would still probably be favorable, but at least manage your risk. Market trade higher. And we're not even at 10 a.m. Short, long. What are we like, 9 for 10, 10 for 10? Here's a trade. I wait for closes or breaks above the number 2. Here's a long. Here's a kind of a fake out that goes probably 67% of profit objective. Here's TP1 to the tick, TP1 to the tick. Here's a short. Never closes above. Target. Not even at lunchtime, folks. Here's a short. We flip around to the long side. And if you like how this looks on the S&P, you'll love how it looks on crude oil. It's amazing. So amazing. And so we're working on an automated program for this. And everybody that purchases the 3S Code Pro package will be grandfathered into a very special rate or whatever. I don't know. I don't have all the details. Working on it extensively with programmers. Don't know when we'll release it. But before we release it to the public, we'll have very special discounts there. I don't understand the question. Yes, you can email me at support@seasonalswingtrader.com if you're having problems. thank you for those that are participating. Can't do it until tomorrow. Yes, we'll be happy to hold or reserve a spot. All right, Don, enjoy the football game. Moving averages, these shorter terms actually just kind of started toying around with for extra confirmation. Those are 5 and 21s, and then just 200-day moving average here. I'm going to look at a daily chart of the S&P. Yes. Here we go. We haven't had a trade since. See, we've been putting in multiple tops, but we never got the confirmation. Now we have a large range, 1, 2, 3 top. Okay. And then we finally got triggered short on the 30-year bond today. Made about a 2-handle move, or about $2,000 per contract on the breakdown below. So, you know, who has spent more than $500 on education? Who spent more than $500 on education? Thank you, Becky, for typing that link in. All right, so a lot of you probably spent $5,000. You spent more than $5,000. Well, this is a way that simplifies your trading, simplifies your life. You can see pretty much all of those examples I just showed you just off a tick chart, you know, and you may be like me when I wasn't interested in tick chart. But look at it on the daily charts and utilize the code for nice, simple daily swing setups. So what is your favorite time frame? Is it mostly intraday, daily, 4-hour? I told you that there's some incredible setups on the hourly 4-hour. If you wanted to come maybe meet somewhere in the middle, you know, maybe you're not a peg trader or a 5-minute trader, but not so much a day trader. I encourage you to take it and look at the hourly and 4-hour. I don't day trade stocks. I don't trade intraday. I do have some people that do intraday trade on stocks. And yeah, if you don't trade the S&P or the NASDAQ or the Russell or the Dow, there's the ETFs. You know, all the ETFs are very liquid, very liquid. And one thing that you probably already know is that CME launched the micros on the S&P, Dow, NASDAQ, and Russell. So you can afford to trade these. You know, some of these ranges get rather large, right? Get rather large and a little bit dicey, a little bit hairy, where there's a lot of risk. No, regardless of how good the code is, it still may entail, you know, 10, 15 points of risk depending on the volatility. Now you can trade with micros. So when the risk is a little bit too much to stomach, because yes, we hope that we're right, or we think that we're going to be right, but the markets are only ones that are right. You know, markets can go the other way quickly, and even if you want to swing trade, you know, so you don't want to carry the overnight margin, or you're worried about the leverage. You know, now you can sleep at night with these micros and not worrying about, you know, 30, 40 point swings and gaps. We use this a lot to trade options and option spreads, so limited risk plays, nothing negative. So if you're not spending, you know, if you're spending way more than an hour a day, again, it all depends on your style. Looking for setups, then this is a tool that I think will be very handy, very useful, because you've got the technology standard and all the work for you, and really you just need to check it at the end of the day, or maybe every hour or 4 hours, depending on what you're doing. Yeah, so here's Amazon. So we had a couple of setups recently. Nothing going on right now. Look at Facebook. So here I'm watching Facebook, and we did have a 1, 2, 3 top trigger, but again, this is where a little bit of common sense comes into play. You know, I would not short the market right into the 200 moving average. That's just my personal preference. Looking for added confirmation. That's what keeps me out of that kind of trade. I can look at HLF. So we did have a 1, 2, 3 bottom trigger there on HLF. I'll look at the pound and the jet and the pound yen. So here we had a quick little 1, 2, 3 here, and we've got one in the making, and GP, JDY. I know that we're in because I'm watching this. Actually, reach target today. All right. Well, I'm being told by the candlestick trading forum team that I think I'm at the end of time here, end of my session. I really appreciate you spending time with me and listening. I hope that you were able to learn something, regardless if you've heard of this before or not. And I look forward to everybody that is joining and coming on board. I look forward to chatting with you. And I want to say thanks again to Stephen, Jim, Becky, and everybody over at Candlestick for allowing me to come in and present to you. Hopefully I get invited back, and hopefully you get some good feedback. To enjoy the rest of your day wherever you are in the world, and take care. Good luck, and hope.
Silas,